Now, anxious South Africans are eyeing the South African Reserve Bank's Monetary Policy Committee, hoping for a reprieve on another interest rate hike today. An announcement is expected by 3 o'clock this afternoon. In July, the MPC increased the interest rate by 75 basis points to 5.5%. We now bring in Johann Els, economist at Old Mutual, to talk to us about what we can expect and why. A very good day to you, Johann. Thank you so much for making the time to speak to us. How does the announcement by Stats SA yesterday that the consumer price inflation edged lower in August, how will it impact the decision today, or is it rather late?
I think it was rather late. It was a good announcement yesterday. The inflation numbers came out as expected, lower on the headline numbers, but lower than expected in terms of core inflation. In other words, excluding petrol and food. So it was actually a good number, indicating that inflation has peaked and will now start easing over the next several months. But as you say, it's rather late in the process. While it will be welcomed by the Reserve Bank in terms of what their view of inflation is still, in an economic sense, enemy number one for the consumer. So the Reserve Bank will still be worried about inflation expectations, and that's you and me expecting price increases to continue upwards. So the Reserve Bank will likely hike by 75 basis points again today. But that is a prudent decision, a good decision, because I think, as I said, inflation is enemy number one. So inflation expectations need to be checked, and therefore it will be a good decision for all of us in terms of keeping inflation under control.
So that out of the way, we shouldn't fool ourselves. It will be going up, as you say. Well, should be.
Yeah.
But just in terms of the other factors that determine this decision we're expecting at 3 p.m., besides inflation.
Yes, central banks are always worried about economic growth as well. But as we've seen across the world, the central banks at the moment are more worried about inflation and inflation expectations than economic growth. So they're willing to sacrifice some of that. In South African sense, of course, they do keep an eye on what's happening in the rest of the world. And we've seen the Fed in the US hiking by 75 basis points again yesterday. The European Central Bank has done the same before. The Bank of England is going to hike aggressively. So all of that impacts on currencies as well. And while the Reserve Bank is not fighting to keep the rand under control, the rand does impact on inflation down the line. A weaker currency does impact on our expectations of inflation. So all of these factors play a role. Plus also the current account, that's a summary of our transactions with the rest of the world. Wasn't that great in the second quarter? Although for the year as a whole, I expect the current account still to be in surplus. So there's a whole range of factors there, and it's not always easy because some of these data lags quite a bit. But at the moment, it's inflation that is the core thing to watch, and the Reserve Bank, while they realize that inflation is probably peaked and will be heading lower, it's still coming back to inflation expectations. If you and me expect prices to continue to increase, we'll build that into our wage and salary demands, and that's what keeps on driving inflation. So inflation is the one to watch. The Reserve Bank is still worried about that, and I think it's a right decision to hike aggressively. But the more they hike, the closer we are getting to the end of this cycle. I think after this, we still get another 1 or 2 increases, but today's decision will likely only take us back to where we were in February 2020. In other words, before the emergency rate cuts started for COVID. So we've seen a recovery in that rate cycle, but it's not worse than what we had before.
So should the Monetary Policy Committee decide to hike rates once again, can South African consumers, especially those who are indebted, who have bonds against their houses and have bought cars, can they afford this increase?
Well, consumers will never like this, but it's this or much, much higher inflation down the line. So again, I suppose you can say the lesser of two evils. Hike rates, go through some suffering, But again, that takes us back to where we were in February 2020. So it's not worse than that at this point in time. So consumers are still under pressure, having lost lots of jobs during the COVID crisis. There's, on an average basis for the SA consumer, there's still some pent-up savings. You know, we didn't spend and go out and go on holidays as much during the COVID crisis as we did before that. So there's a little bit of a buffer there still for consumers. It's not a nice thing to have, but it's the lesser of the two evils.
We're a bit time tight, but I hope you can sneak in your answer here. We're getting reports that overnight the South African dollar consolidated a bit against the US dollar, going to 17.75. Will this have an impact at all on the decision?
I don't know. It's very difficult to say. To some extent, these things are priced into the currency markets before the event. I think everybody expects a 75 basis point rate increase by the Reserve Bank in any case. So I doubt that there will be a lot of impact. But the short-term currency moves, like over the last few weeks, that tend to get reversed. I think the rand is cheaper or weaker than what it should be. So I think over the next year or so, the rand will likely become a little bit more stable than what we've seen. The bulk of the impact on the currency, on the rand, over the last few months has been the global impact, a very strong dollar. Some local factors have played a little bit of a role, not too much, but certainly load shedding, worries about that would have had some impact. But the bulk of the impact on the rand has been a very strong dollar.
And we're going to have to leave it there. Thank you so much for your time. Economist at Old Mutual, Johann Els.